with Bitcoin, it's an alternative monetary network, which is literally outside of the traditional system. So if you remove your money from that system, they don't have anything. The government doesn't have any money, right? The central bank doesn't have any money. They have your money. That's all they have. And so if you remove your money and put it somewhere else, you literally make them obsolete.
Hey everybody, it's Brad here. I've got a great guest joining me for our conversation today, Layah Heilpern. She is the author of Undressing Bitcoin, and she comes on today to tell us about just the basics of Bitcoin 101 and some of the more political elements of it as well. Layah, thanks so much for joining us.
Yeah, great to be here, Brad. Super excited. Love when two different communities get to connect. So yeah, thanks for having me.
Yeah, I feel like there's a big overlap between the crypto community, or Bitcoin specifically community, and libertarian communities, but it's not necessarily the same. But there are a lot of people who are in both.
Oh yeah, absolutely. I've been talking about this a lot recently. I think I might even tweet this after the show. I think that the next wave of Bitcoin adoption will be where the intersection between Bitcoin and politics meets, basically, because of those libertarian underlying values, which we'll get into.
Yeah. So maybe just start by telling us a little bit about yourself. Like, you're now an author and a Bitcoin content creator, an influencer, an educator. How did you end up here?
Yeah, so I'm actually a journalist by trade. So I studied journalism at university. I used to do some work for a lot of local London television channels, like London Live, the Evening Standard newspaper. I did some work at the BBC, worked for the Chinese at one point.
Ew.
China's global TV network. Oh yeah, also a lot of state media. But basically, when I was working in London, I didn't get the job that I wanted. I was like begging for the promotion and they wouldn't give it to me because I was too young and all that rubbish. And so I just saw a job in Malta, which was to be a journalist for crypto and blockchain. And I took it, and then it kind of just went from there, went down the rabbit hole.
Boom. Well, that brings us obviously to the topic that we want to talk about, but just honestly for people, like, I'm imagining my mom listening right now. What is Bitcoin? Like, the most basic definition?
Okay, so I'll try to keep this really simple because I think there are so many different layers and different like facets to describing it. But I think now I would look at Bitcoin as digital money and also digital property, which means that it's basically a computer network which is decentralized. So there are servers running across the globe, and these servers are basically what keeps the network going. So you have Bitcoin, the network, the computer network, the internet that is basically securing this thing, and then you have the currency Bitcoin. So there are two things. So a lot of the time people will refer to that computer network as Bitcoin, and that's Bitcoin with a capital B, basically. And then Bitcoin with a little b is the currency. And basically, people can trade peer-to-peer. So I can send you Bitcoin, Brad, right now, instantly, low fees. And there's no middleman. There's no central bank. It's completely outside of the traditional system. It's completely unique to how we have traditionally done money. It's literally like digital cash in that I give it to you, you give it to me, and that's it. There's no third party, there's no CEO, and that's what makes it so unique. So that's the most basic way that I would describe it.
Yeah, but it's also, it's like digital money, except money traditionally, at least, has been done and controlled by the government. And it's an alternative monetary system, as you've described it in the book, right?
Yeah, absolutely. So the whole point is that it is decentralized. So the fiat system is entirely centralized, central banks, governments, and so on. And so they can basically track everything that you've done. They set monetary policy. They basically can do what they want. They can print endless amounts of money, which then creates inflation, the entire thing. So with Bitcoin, it's totally separate from that. There is no central bank. There is no individual CEO that can change the rules. So the rules of the Bitcoin network are set in stone. It's a bit like the Bible. This is what I say in the book. It's a bit like the 10 Commandments. Like, these are the rules, and they cannot and will not be changed. They are literally set in stone, and they're set in stone by the founder or the creator, which is an individual or a group of people we don't know yet, who goes by the alias Satoshi Nakamoto. So this person or group of people created this cryptocurrency, and we don't know who they are. We don't know where they are. They disappeared in 2010, which is one of the most genius things that they've ever done. And absolutely, yeah, well, we could get to that. And everything is set in stone. There's a finite supply. There'll only ever be a limited supply. There'll only ever be 21 million Bitcoin, which is important because that makes Bitcoin totally different to the traditional system whereby they print endless amounts of money, causes inflation, as I said, helps pay for wars on both sides. So with a limited currency, something where there's actual scarcity, that's incredible for it being a deflationary asset, for having money where there's actual value, money which is backed by something, which is the math and code of the network, the reliability of the network. So yeah, I hope that sort of shows the difference between the centralization and the decentralization. It also means, just to add as well, that the network can't be turned on and off again, like we see with some cryptocurrencies like Solana, for example. And as we record this, Solana is down right now. So that's another crypto and another network. So it can't be turned on and off again. There's no central bank. There's nobody that can manipulate the network, and it's totally decentralized. So again, it's just peer-to-peer, me and you. Nobody can interfere, basically.
Yeah, and you mentioned cryptocurrency there, and that was something that was really interesting to me when I first read your book, when I first discovered the world of Bitcoin, is prior to that, Bitcoin and cryptocurrency were kind of viewed as synonymous terms in my head, erroneously. And a lot of people are just like, oh, Bitcoin, crypto, those are kind of the same thing. They're two words that mean they're referring to sort of the same thing. But actually, Bitcoin is a specific type of cryptocurrency and is worlds away from other cryptocurrencies, which have, like Dogecoin is a meme coin. It's a joke. But you'll often hear people, like even Senator Elizabeth Warren, right, conflate the two. So can you just explain to people the difference between Bitcoin and just crypto as a concept, or some of the cryptocurrencies that are out there, because they're wildly different, right?
Yeah, absolutely. And Senator Warren is so ridiculous. It just shows her ignorance on the subject, which is fine, but it's concerning because you shouldn't be implementing legislation on a subject you clearly are very ignorant on. So that is massively concerning. But I guess it depends who you speak to. So to be clear, Bitcoin and crypto are in two separate leagues, but it depends who you speak to. Some say Bitcoin is a cryptocurrency. Others say, just by definition, because it's cryptographically created on the blockchain. But others say there's Bitcoin and then there's crypto. But they are different. And the reason that they're different is, well, to be clear, firstly, they are both digital currencies, which is why you could say they are sort of the same thing. But the way that they are built is different. And I know it's like sort of a bit of a cliche or a cringy thing to say, but it's like people, how some people are better than others, for example. Like some people have better genetics. Some people are more trustworthy.
Like us.
But like literally like that. So but then you could rely on us to do certain things because of the way that we're built, right? Like, for example, if you and I, you could rely and predict that you and I could run a race very well compared to somebody that's severely overweight. That's the difference, because of just the way we're built. Right. So technically we're both humans, but because of the way we're built, some are more reliable to do certain things. You could trust us to do certain things. Some people are just built better. Some people are more honest than other people. Some people are more corrupt than others. So it's literally just about the way it's built. So Bitcoin is the only cryptocurrency which is truly decentralized and doesn't have a CEO. All the others have CEOs and founders and companies. And so that becomes very concerning when it comes to having money which is truly outside of an individual person's control or an individual company's control. Ethereum, for example, which is often seen as the second best of Bitcoin, is also concerning because Ethereum is moving its security mechanism. So usually Ethereum is secured by proof of work, which is the mechanism which secures the Bitcoin network, but it's changing and it's moving to proof of stake. Now, proof of stake, for many reasons which you don't need to get into, is less secure than proof of work. So it's actually concerning that the technical mechanism which secures the network is changing. That therefore makes Ethereum less reliable. It's not good money. You want to buy money that that's predictable. I believe good money is money which is predictable, so you can plan for the future. It's also why, like in the fiat system, they often predict. We know that the fiat system has an inflation rate really in the West.
Just for listeners.
Yeah, so fiat is government issued, central bank issued money. So like dollars, euros, pounds. And so in the West, we predict an inflation rate of around 2%. Obviously, because of the pandemic, we're not at that. But it's good because it means we can predict and we can plan accordingly. People can plan their investments accordingly. So you don't have that with all the other assets. Also, all the other assets, they are coins of startup companies. So Solana, for example, which I mentioned, is very VC backed. It's centralized. And so you have all these big tech investors who basically control the network and choose whether to turn it on and off again. And people have agendas. And so therefore, I would not say Solana is good money for that reason. And also Solana it's new. It's a startup. These are all startups, whereas Bitcoin isn't. Bitcoin isn't a project. It's not a startup. It's also proven, right? Because it's the oldest. It's been around since 2009. And I would say the last 13 years have been particularly fascinating and volatile. And Bitcoin has stood the test of time in that respect. Obviously, with regards to like the stock market and gold, it hasn't stood the same test of time, which is why people still regard it as a risk on asset, and it's why it's still correlated during times of uncertainty, and it's why it's down right now because of all because of like the crisis right now that's going on across the world, the wars, the inflation and all that. But it has stood the test of time in comparison to the others. And so that's sort of what makes it different. It's the way that it's built. It's built with more trustworthiness. It's built with more hard code, basically, more reliability. And it's really just the fact that everything is set in stone, and I can trust Bitcoin to always survive regardless of what happens next.
Right. And one of the principles or characteristics of Bitcoin that you talk about a lot is the fact that there's no central authority that can increase the supply. Like with the US dollar, right? We've seen these crazy inflation rates over the last year that are eating away people's paychecks. They're stealth taxing us. They're really hurting us. And that's because there's a bunch of reasons, but one of the biggest reasons is because the Federal Reserve, they went money printer goes burr. Jerome Powell and the other central bankers. I just say in the book, you refer to bankers as banksters, which I had never heard, but that's hilarious.
That's amazing. Yeah. We call them banksters.
Well, anyway, though, what they did is they wanted to stimulate the economy, so they just created trillions of dollars out of thin air, which obviously made the dollars in existence less valuable. But you're saying, and you talk about like nobody can do that for Bitcoin. The supply is predetermined. No one can control it. No one can inflate it, right? So is that one of its main kind of value adds?
Yeah, 100%. So there is a fixed limited supply. So again, it has this predictability, and nobody can decide that we want more, basically. So you have to understand that you have like hundreds of thousands of miners all over the world. These miners are people that secure the network. And in order to make a change to the network, you need more than 51% of the network. So it's like democratic in that sense. And 51% of the network need to agree the change. Now, any change that happens has to be beneficial to the network. Now, increasing the supply would not be beneficial to these miners. So in order to become a miner, it's very expensive, okay? Because you need physical equipment, and there's a lot of computational power required, which means you have huge energy bills to pay. So these people are literally incentivized to make sure that Bitcoin flourishes. And if they were to increase the supply, Bitcoin would not flourish. And so Bitcoin would go down and they wouldn't be able to pay their energy bills, basically. So it's really important to understand that the Bitcoin network is really an incentive model. And so, yeah, you need more than 51%. And that's a lot of people. It also means that, and also another point to mention here is we have seen disagreements on between like developers and miners on the network before. And what that leads to, and I talk about this in the book, is a hard fork. So That's why you have Bitcoin Cash, Bitcoin SV. These are forks off of Bitcoin. So you have the original Bitcoin, then you have these forks which were created, basically, spin-offs that were created because of a disagreement on the network. And that's fine. That's just the free market doing its thing. But the real Bitcoin still exists, it's still intact, and is still doing what it was supposed to do. So it's like, okay, you might want to increase the supply, but that wouldn't affect the original Bitcoin, because you can go and increase the supply, but you're basically going to create like a new Bitcoin, and that would be Bitcoin 30 million because you increase it to 30 million instead of 21 million. So ultimately, it's an incentive model, and people agree and know that if you were to do this or you were to do that, if it's not going to be beneficial to the network, it won't be implemented, because everybody, and this is what's really interesting about it, it's why the left should love it, everybody, regardless of, you know, your gender, your sexuality, your race, your religion, has one common goal, and that's to see your money flourish. So yeah, it doesn't matter, basically.
Yeah, so that makes complete sense to me conceptually. No one can inflate Bitcoin. But then I want to ask, though, why doesn't it seem to serve as a hedge on inflation in reality in its prices? Like sometimes a big inflation report will break about, and then Bitcoin will go down. When it would seem to me, based on this concept, it should go up. Why is that?
Yeah, so I still stand by the point that Bitcoin is a hedge against inflation. So if we go back 2 years, before the money printing started during the pandemic, Bitcoin is up 300% in the last 2 years, outperforming all traditional asset classes, including gold, which I believe hasn't really moved in the last 2 years. Okay, so I would say Bitcoin is still very much a hedge against inflation. However, so it's important to zoom out and look at the bigger picture. I understand that right now there's price volatility, but that's simply because Bitcoin isn't yet an uncorrelated asset. It's still going to be affected by geopolitical events, which I mentioned earlier. Right now, inflation is at astronomical levels, highest levels in 40 years, which means people don't have the surplus cash to start investing into alternative asset classes, or just investing full stop, right? They need that money to simply live, which is why we're not seeing it necessarily hit new highs right now. But we have just had a 2-year bull market. Nothing goes up forever. It's still up 300% in the last 2 years since the beginning of all the money printing. So I would say it is that hedge against inflation, and just give it time. You know, right now we're seeing 40%. We're seeing the highest inflation levels in the last 40 years. 9% inflation in the UK. I think it's around 8.5% in the US. And so if we have a look at where Bitcoin is in the next 2 years, then who's to say that it's not going to be at $100,000? It's not going to hit new highs. And it's also just still such a new asset. It's only 13 years old, and so it's going to be a volatile and a rocky move. But we're at $30,000. I think that's incredible, up 300% during a global pandemic, outperforming all traditional asset classes, including gold. So I think it's pretty great.
Right. So basically what you're saying is in the short term, it might fluctuate with inflation, but long term, it's still serving as a hedge against inflation.
Oh, absolutely. 100%. You only need to zoom out and look at the numbers to see that. And I think Bitcoin at $30,000 is pretty amazing. It's an asset which is 13 years old. You have 2 countries that now use it as legal tender. And so for me, it's like it is the absolute hedge against inflation. It's digital property, which we can talk about. And yeah, the numbers speak for themselves.
So we're starting to see an effort, even here in the U.S., with the federal government seeking to regulate it. One congressman is trying to ban Bitcoin outright, but in other countries, they're literally banning it or trying to. Why is it that governments seem to hate Bitcoin so much?
Because Bitcoin is inherently outside of the traditional system, and so people. Okay, let me try to make this actually really simple. Okay, so like money is the root of everything, right? Like money serves everything. Even if you just look at like billionaires aren't arguing about race and gender. No, they're billionaires, right? Money is the root of everything. You fix the money, you fix the world, right? And so with Bitcoin, it's an alternative monetary network, which is literally outside of the traditional system. So if you remove your money from that system, they don't have anything. The government doesn't have any money, right? The central bank doesn't have any money. They have your money. That's all they have. And so if you remove your money and put it somewhere else, you literally make them obsolete. That's the point. Bitcoin has the ability to dismantle all traditional. I know, that's the point. Bitcoin literally has the ability to dismantle all these systems because you just don't need them. You don't need a central bank setting monetary policy because the monetary policy is set. It's set in the white paper, which Satoshi Nakamoto wrote. And so you don't need anything else, and then also because it has a limited supply. Governments like to print money. They like to make more money for themselves so they can do what they want, whether it's fund wars, whether it's create crises or whatever it is. And so with Bitcoin, given the money is absolutely limited and is outside of their control, it literally makes them obsolete. Bitcoin has the ability to totally disintermediate and dismantle all these major institutions.
Well, and one of the other things you've talked about as a unique property of Bitcoin that really adds value that governments really don't like is that, with some caveats, it is non-confiscatable. You write in the book, you explain that if you store it properly, and I don't want to get into the details of all that, but because that's a little bit wonky and in the weeds, but basically if you have it on Coinbase, it's not safe. But if you actually do the steps to have it, your keys, your crypto, cold storage, this other stuff that people can look up the details if they're really interested in. If you do the utmost security, your Bitcoin cannot be confiscated. Whether you're a refugee trying to flee countries, whether you're like the Canadian trucker protesters and the government's trying to shut down your bank accounts, or, the government's seizing your assets in dollars like they can do. But one of your points, right, is that Bitcoin says they can't confiscate it even if they want to.
Yeah, exactly. And that's another reason why they don't like it. The Canadian example is just so amazing. And I think that's how you sort of fell in love with Bitcoin, I think, because we saw Justin Trudeau try and confiscate the money and freeze the funds of democratic protesters who are literally protesting to have the right to their own body. They just wanted to have the right to their own body. And like I said, money is the center of everything. So if you freeze somebody's money, then you basically screw them entirely. That's kind of the to put it as blunt as possible. And so with Bitcoin, it is literally non-confiscatable. Yes, if you leave it on a centralized exchange, because these exchanges are regulated and they have to be regulated by the local financial regulation, like whether it's the SEC, the FCA in the UK, they need to be regulated in order to literally just to work, right? And so they can freeze the bank accounts of, or just simply the accounts of those people living in that country. But when you then remove it and you just take it off and you put it in a non-custodial wallet and you take self-custody, this means it's just you and the blockchain, no third party, no middleman. It's non-confiscatable. And the only way that you can access this on the blockchain is with your private key and your seed phrase. Now, because there's no third party, and I say this in the book, there's no Karen at HR that you can call if you lose it. So what Bitcoin does and what I love, I know I go on like a rant here. What Bitcoin does and what I love is that it inspires and empowers you to take personal responsibility, which we so desperately lack in society, because you have to take personal responsibility over your keys and your seed phrase. And the only way for somebody to confiscate it is to literally steal it from you, is because if you're not very careful, you don't have good security practices, you tell people where you leave it, the government can come take it. If you're going to leave it out in your house very clearly, the government can get a warrant to your house for whatever reason, they can come in and take your seed phrase. And so the best thing to do is to have very good security practices. Whether it's engraving this important information on a piece of metal, because paper can get destroyed, and whether it's having it written in code, not leaving it in your home, leaving it in a private place somewhere very secretive where nobody knows. It's just you and your keys. Nobody can, literally, this is so important, because there are so many people that have actually forgotten their seed phrases. They've lost their private keys. There are people that have died who haven't told people where their seed phrases are or what their private keys is. And so the money is gone forever. So although there's 21 million Bitcoin, so much has already been lost. I'm actually not sure. I can't remember the figure, but so many has been lost because there's no one. You can't be like, hey, CEO, hey, Satoshi, can you open the blockchain? No. Nobody can. And actually what's funny is there's a company called Nunchuck, and Nunchuck basically are a software provider for these non-custodial wallets. and all they do is provide the software or hardware, I'm not sure, but they provide the interface basically to the blockchain. And the Canadian government reached out to them wanting the wallet addresses and the names and the amounts and all the details of certain people that are participating in the protest. And Nunchuk replied something so amazing, and it was like, by design, it is not, we do not know how to access this, and it's done by design to protect people from tyrannical governments. When the Canadian dollar goes to zero, we'll be here to serve you too. It was just so good. I know, just so amazing. And yeah, that's the point. It's non-confiscatable. And during a time whereby the government has absolute control over every aspect of your life, right? Like you're not allowed to work because of the pandemic. You're not allowed to see your family. Soon you're not going to be allowed to eat meat because it's bad for the environment. You're not allowed to do this. You're not allowed to go outside. You're not allowed to go to the gym. All this rubbish. The one thing that you know for a matter of fact is you have that relationship with your money. Nobody can do anything about it. And as I keep saying, money is the center of everything. And so it's so empowering and it's so refreshing. And yeah, you can flee many different, you can flee anything, I mean, like I travel around the world a lot and I don't need to worry about bank accounts and this and that. Like I've got my Bitcoin and I'm good. Like I can just go. And so, yeah, it's truly one of the most empowering inventions, in my opinion.
So now I want to just run through a couple of the things that critics of Bitcoin will point to or governments will point to as a pretext in order to regulate or crack down upon it. And maybe they're myths, maybe there's some truth to them, but I want to know what your response is. One is that, is Bitcoin used by criminals? Does it enable like the black market and terrible things and criminal behavior?
Yeah, it's a great question. So let's break this down a little bit. So because Bitcoin is run on the Bitcoin network, which is blockchain technology, you can actually see every single transaction that has ever happened. So that would be very silly if you wanted to use Bitcoin for criminal activity. You can literally be traced. Every single transaction, every single wallet involved can be traced back to the original source. So I would say Bitcoin is one of the worst things you could use for criminal activity because Bitcoin is both simultaneously anonymous but also entirely traceable. So although there's no name directed at that address, there's no name affiliated with a specific address, it is entirely traceable, and it's not that difficult to find out necessarily. If you are the FBI, the CIA, you have the means to find out whose address belongs to who. And the point is as well that like in order to cash out and actually use that Bitcoin in the real world, you need to go to an exchange and you have to do KYC on that exchange. KYC is know your customer. That's what it stands for. And it's about giving your identity. So in order to sign up to the exchange, you have to put down your address, your passport, all your information. So at some point, these criminals are going to need to cash out. And as soon as they hit KYC, they get, that's Brad, right? Now I know that address belongs to Brad. Now I can see, basically, yes. And then you can go back and see every single transaction, every single person that Brad has transacted with. And now we have you in the interview room and we can do whatever we want. And we can basically get every single piece of information that they want from you. The best form of money to use for criminal activity is cash. Cash is the best. Do we ban cash? No, we allow cash. And ultimately, like AML procedures, anti-money laundering procedures will develop in order to protect people or, against criminal activity. For example, you can't move around the world with large sums of cash. You can't go buy, a car, for example, cash in hand. Like, there are going to be background checks. There are going to be procedures that need to be done. And so say I wanted to go buy a house directly with Bitcoin, there are going to be some procedures that need to be done. And then also in terms of like tax avoidance or something like that, or tax evasion, like if you want to spend the money that you've avoided paying tax on, you're just not going to be able to spend it without an inquiry. Like if you were to avoid tax and then so that you could go buy a house, the bank's going to be like, hey, how are you buying that house if you only earn $20,000 a year? There's going to be an inquiry. And so Bitcoin is just not good for criminal activity. And then also, I believe the number is in the last like year or so, I think it was actually 2021. I think it was between 4 to 5% of global GDP was laundered by fiat currencies like dollars, euros, and pounds. That's a large amount of money that was laundered by fiat currency. So are we going to ban fiat currencies now because they enable illicit activity? No. Ultimately, like as with anything, you can find a way to use it for criminal activity. A laptop, a car, whatever it is, it can be used to facilitate criminal activity. Bitcoin is the worst thing to do because it's entirely traceable.
Yeah, that makes a lot of sense. And it's just like, even if it is sometimes used for it, so is cash. Like, it's not really an argument against it, but it is often used as a pretext. The second one, and this gets a little complicated, so let's try to keep it high level if we can on this one. But Bitcoin, not the currency, but the network behind the currency. The mining process uses enormous amounts of electricity, of power, right, to run the code or do what, I don't want to get into details, but it uses a ton of power. And so some people look at that and say, wow, this is terrible for the environment. This is causing tons of climate change, massive CO2 emissions. We need to regulate or crack down upon this. Is it true that Bitcoin is bad for the environment?
Okay, so there's so much to unpack here. I'm just like figure out the best way to unpack this. Okay, let's start with energy arbitrage. Okay, so energy arbitrage is exactly what it sounds. It's basically it's seeking out cheaper energy. Okay, so the reason, and Bitcoin is the very first time where we see energy arbitrage, because typically when you transfer energy from one place to another, you lose a lot of it, and that's very expensive. So with Bitcoin, because it's never been decentralized and you always have to transfer large amounts of energy and you lose a lot of it, you tend to use energy in the local area, whatever you have access to. And that might mean burning fossil fuels. It might mean letting off loads of carbon emissions. And so it's bad for the environment. But Bitcoin, because it's decentralized and can be mined from anywhere in the world, it can seek out cheaper energy. And what energy is usually cheaper? Energy which is wasted energy. So let's go to El Salvador. They have volcanoes in El Salvador. And so there's a lot of wasted geothermal energy. You can then use that you can then mine Bitcoin in El Salvador, use that geothermal energy, which will be cheaper because it's wasted. And so people want to get rid of it. And remember, there's nobody else that can take it. There's no one that wants to take it just because of the location. And so Bitcoin miners can go there, get the cheaper energy, and it has zero CO2 emissions. So that's the point. You can go anywhere in the world. China used to be a really big spot for this because there's a lot of when they have like the rainy seasons and all this, there's a lot of wasted energy. Even like major power plants are built for energy usage in 20 years time. They're not built for the energy needs of today. They're built for the energy needs of tomorrow. So while you build those major power plants, a lot of there's 20 years, 10 years can go by, and that investment in building that power plant won't be paid back until it's ready and somebody starts paying for that energy. But because of the location, remember, it's in the middle of nowhere. Nobody wants it. It's literally wasted. And so Bitcoin miners can go set up. And remember, the people don't have to be there. It's just the computers. They can set up a mining farm where it needs to be set up, and they can start paying back that energy now. And so it uses wasted energy. It uses renewable energy. People and miners are literally incentivized to seek out that cheaper energy. Because remember, mining Bitcoin is very expensive. And so miners are literally incentivized to do energy arbitrage. They can go anywhere in the world. And this is the very first time we've ever seen miners being able to do that. And I think a statistic recently came out actually by Chainalysis that I think more than 50% now of the Bitcoin network is using renewable energy. So that's pretty amazing. And the fiat system can't do that. Let's be clear. The fiat system can't do that. And also, the whole entire production of the fiat system, right, from notes to coins to bank branches to ATMs, the whole creation of it, the printing, the entire infrastructure. Think about how much that puts on the environment. Think about how bad that is for the environment, not to mention how evil fiat money is anyway, in terms of the fact that you can print more, fund wars. The entire energy production of gold is more than that of Bitcoin, from jewelry to the mining. Let's not forget how exploitative the mining of gold can be. And so, yes, Bitcoin uses energy it would be intellectually lazy to suggest that it doesn't, but it uses less energy. You can seek out cheaper energy. It can use renewable energy. There's energy arbitrage. It's still better for the environment than the traditional system and the energy production of gold. And with all of that in mind, and this is something which Satoshi Nakamoto, the founder, discusses, we have to consider yes, it uses energy, and yes, it's less than everything else, but also, what is the net positive of all of that in mind? Like, people leave their Christmas lights on, by the way, and that actually uses more energy than Bitcoin does. Is that a net positive? No. Bitcoin has it's a net positive for the world and the environment. Having money which is scarce, having money with a limited supply, having money which is decentralized, money which can't fund wars, which creates a much better, fairer system. And so despite all of the energy that it uses, it has a net positive. But let's not forget the fact that nobody cares about all the Christmas lights and how that's bad for the environment, right? Nobody cares about that. And so my opinion is that this focus on energy is intellectually lazy. It's a lie. And it's a reason to take down Bitcoin and to trick people into thinking that Bitcoin is bad. It's just another scapegoat. Because Bitcoin, as we discussed, has the ability to make all of these major institutions obsolete. And so obviously they don't want that. And so they start pushing this narrative that is bad for the environment. I hope that wasn't too technical.
No, I got a little technical, but you hit so many points there. One thing I think I remember from the book, and tell me if I'm wrong about this though, is that Bitcoin uses a lot of energy with the caveats that you just mentioned, but also it uses that energy whether 5 people use it or the whole world converts to it, right? So theoretically, because it's in economics, we would call this a fixed cost. And then there's like a marginal cost, a per unit cost. And traditional currency, or the traditional banking system, has this big per unit. Every new bank you open, every new batch of bills you print has an additional cost in addition to that fixed cost. But doesn't Bitcoin mostly just have that fixed energy cost? And then, I mean, you could have billions of people switch without much additional energy being needed.
Yeah, that's exactly correct. So like the more people that join the network, it doesn't mean the more energy that's going to be used. That's just not the case, because ultimately there's only X amount of transactions that can ever happen at that moment. So there's only, and each block, so there's a new block is added to the chain every 10 minutes and only 1 megabyte of data will ever be added into that block. And so we literally have an algorithmic like pacemaker, which like is self-regulating and ensures that only a certain amount of transactions happen in a certain amount of time. And so it doesn't matter how many people join the network. It makes no difference, because there will only ever be 1 block added every 10 minutes. And so, yeah, it literally makes no difference. And that's the amazing thing. So it's like, this is how it is now, and this is how, and it can only get better from here, essentially. And the reason it can only get better from here is because these miners are becoming more advanced. And so I don't know like the technical term, but I do know that more energy was needed back at the beginning to confirm a certain amount of transactions. Now, because the machines are more advanced, less energy is needed to confirm certain amounts of transactions. So as these miners become more advanced, it will require less energy, simply because technology is developing. I mean, it's the same as like a computer, right? Like back in the day, you needed all this stuff to make a phone work, or the phones were like bricks, right? Computers were super chunky, TVs were super chunky. So you needed all this stuff to make sort of one simple thing happen. Now it's a far more efficient process. And so the same is true for Bitcoin mining.
Yeah, that makes a lot of sense. I guess the final like myth or thing that people will say about it is, and this is not a partisan thing. Weirdly, even Donald Trump has said this, that like Bitcoin is a scam or a ripoff, and it is volatile, right? The price fluctuates, so some people have lost a lot of money. But when people call it like a scam, what are they trying to say, and why do you think they're wrong?
I mean, like scam is such a vague word. Like, I don't know what they mean when they say scam. Like, we'd have to have like a deeper discussion, right? So like, is your issue with the price? Well, we covered that. Nothing goes up forever. It's definitely self-proven. It's up 300% in the last 2 years. It's clearly proven itself to be a hedge against inflation. Are you upset because you lost money? Is that why you're calling it a scam? Or did you buy at the top? Were you irresponsible with your trading? Do you think it's a Ponzi scheme? Is that what you mean? Well, it's not a Ponzi scheme, because a Ponzi scheme literally relies on investors in order to survive. But if you removed all the investors from the Bitcoin network, the price would drop, correct? However, the network would still continue to run. It would still do what it was meant to do. It'd still be a decentralized network, immune from government corruption, still allow us to trade peer-to-peer outside of the traditional system. The limited supply would still be there. So all the fundamental things which give Bitcoin value would still be there if all the investors were removed. And so when people call it a scam, I mean, I think it's just like, it's just bitterness, isn't it? Like, it's just bitterness. It's a lack of understanding. Yeah, I mean, it's like people calling the internet a scam in the early days. And then also, you know, like, yeah, exactly. And then also, like, there are scammers around. So for your listeners, I have a lot of fake accounts. Like, if you check me out, please be careful.
If you search your name on Twitter,
Instagram,
there are like 50 accounts with your name.
And on Instagram, I think Instagram's worse. Like, so people might, so these fake accounts, as soon as somebody follows me, these fake accounts will follow them. And then they might say to them, like, hey, I'm doing this Bitcoin thing, like, come invest with me. I'll give you, you know, I'll give you double the amount that you give me. So people send them like $1,000 and say they'll give them like 10,000 back in Bitcoin, and then they get scammed. So maybe they met a scammer that scammed them. I don't know, but Bitcoin definitely isn't a scam. And if you think it's a scam, again, that's intellectual laziness. I'd really urge you to look at it ASAP, look into Bitcoin ASAP, because it is the most revolutionary technology that we have ever seen. And so, yeah, you don't want to be, it's a bit like Amazon, and yeah, it's a bit like Amazon. Like, you don't want to be jumping into Amazon in 2022. Like, you want to be getting it back in the early days. So yeah, I urge people to just not miss out. I think millennials, like, well, I think we're both millennials. Millennials often complain that, like, you know, all the opportunity is gone. Like, our grandparents were able to cash buy houses. They were able to do this. They were able to do that. Like, you know, this get in early, buy gold early, the stock market, whatever it is. You know, now it's impossible for us to get on the property ladder. Well, I say now, actually, we're at the beginning. Like, our grandkids are going to be so jealous. They're going to be so jealous that we were here at the beginning. And people don't realize that. People talk about, like, you know, people, their great grandparents, you know, moved to America and they bought land early and all this stuff. Now, like, Bitcoin is like digital property. We now have the ability to buy this new digital land early. So get in on it, wake up, realize this is our new financial revolution. This is our American dream. And we get the ability now to buy land, albeit digital land. And our grandkids are going to be very jealous of us.
All right, well, I think that's a pretty great place to leave it at. Everybody, I really can't recommend her book enough. Undressing Bitcoin. I'll put the Amazon and Audible. I listened to the audiobook, by the way. It's your brother that reads it, right?
It is, yeah. My brother reads it. I was sitting with him and I was like, no, read that line again. Do it again. Do it more like this.
His British just listening to an audiobook with a British accent makes it so much more entertaining, and you feel so much more sophisticated. But yeah, everybody, so I'll put the links to the book. It's short too. It's like a mini book, and it's got everything you need to know about the basics of Bitcoin. Check out Layah on social medias. That'll be in the description. And thanks so much for joining me today.
Thanks so much, Brad. Great questions. Really enjoyed it. Thanks so much for having me on.